Hi. I want to remind everybody this week there's an important distinction between our long-term forecasting, which is very deterministic. We can project when people are going to spend, when certain cycles hit and peak and bottom, and short-term forecasting. Within that, there's so many more things that can happen short-term. A lot of short-term cycles, fewer long-term. A lot of political factors, and boy, do we see them today in 2018. So I always have two scenarios. I try to boil it down. There's infinite scenarios short-term, but I always try to say, okay, here's the two most likely scenarios going into the next few months, the next year, or whatever. So always note that. And we have to do that. There's no way to predict the short term as accurately as the long term. And for investing, the long term's much more important to predict anyway. Now, it just happens right now. We've got a number of very important scenarios playing out. The first one, of course, I've been talking about in recent weeks. There's two scenarios for the stock market. We are in that final bubble of the bubble. The Trump rally has only accentuated this, and the tax cuts. And so the real question is, and there's many signs for both of these, is this bubble about to peak? And I've got a number of indicators I've covered in boom and bust and some of our updates and stuff about some factors pointing to, we might just see a sneak crash come in the next few months just when nobody expects it. And Wall Street is not expecting a crash here. The more likely scenario still by even my long-term cycles and some other indicators is that, no, this rally is probably going to correct in the next couple of months, but then have one more leg into 2019, and then we get this big crash, and on a very important 45 and 90-year cycle that's going to hit around late 2019. So there's two scenarios. I can't get better than that. And that way you can see, and we can update you. Is scenario one looking more likely, or scenario two? And this is going to be very important. It's a difference between the Dow peaking in the next month or so and the Dow peaking late next year, 30,000 versus 26 to 27,000. Now, I'll tell you that just to show you the extreme, Bitcoin is just, this one I'm having to tell people, let me tell you my two scenarios on that. That bubble burst, we called that literally weeks within the top when it started to burst because it showed the signs of a bursting bubble. And it burst 70%. It went from 20,000 to say 6,000 roughly. Well, that bubble burst has not followed our bubble model quite as much. It did burst, but it didn't go as low, as quick, and it looks like it's trying to find a base. So there's two scenarios there. One is that Bitcoin keeps following the first internet bubble and burst, which would say literally within a year probably it's going to be at 1,000. It went 20,000 to 5,000 to 6,000 and down to 1,000. And then it will have a long-term normal boom like the internet did for 18 years after that bust into 2001 and 2. Scenario two, now get extremes. Okay, scenario one's down to 1,000 the next year. Scenario two, in the next 1 to 3 years, Bitcoin bases out here, has one more bubble rally into late 2019, say at the earliest, and as late as 2021 in the midst of this next crisis, if people go running to cryptos, which is a possibility. And Michael Turpin speaking at our IES conference, that's his basically view. So that's just an extreme. We got two scenarios, but we can watch that Bitcoin. If it can hold that 5,500 level plus or minus for another so many months, it's going to favor that radical scenario too. And that's good to know. So again, though, just to remind you from our broader view, we are coming up on the greatest crash in our lifetimes, the greatest downturn and depression. This is coming later than normal because governments have staved it off massively, but that staving off just makes it worse. History's clear on this. Everything's clear on this. Common sense is clear on this. So this is a time where you may have a harder time keeping your job or making money in your business. And again, all of our services, investment services, are designed to allow you to make money without long-term buy and hold and locking yourself in a bubble time, to keep making money systematically on the way up, higher risk, lower risk. And when things reverse quickly and find ways to make money on the way down. Well, Lance Gaitan runs our Treasury Accelerator. I'd call it like a medium risk strategy, where he's found a way that people can profit. Just literally select trades, just a dozen or so trades a year. He has what he calls the 2-hour work year. He's giving a free seminar on this on Tuesday, the 25th of September. It is free, but you do have to register. I'd recommend listen to what Lance says and see if you can find ways to make more money on your money, not only to get richer, but to cushion yourself from what's likely ahead.